on Reggie Middleton a few years ago when I was researching general growth properties. He was so far ahead of everybody and so detailed, and then he started warning about Bear Stearns and Lehman. Well, he was so far ahead of the curve, I actually thought he was nuts.
This is sort of the way you work, that you sort of compare balance sheets with reality?
Yes, that's what I do. Not just balance sheet. I compare reality with the economic reality with the reality that's reported on paper through companies and through the media, etc. When there's a discrepancy, I attempt to take advantage of the discrepancy. And that's the discrepancy on the upside or the downside. You know, I dislike it when I listen to the financial media and I hear terms such as you're pessimistic or you're optimistic. If you're pessimistic or optimistic, you'll probably end up being broke very soon. The key is to be realistic.
Reggie Middleton houdt kantoor op de zolder van zijn prettige villa. Zijn blog heeft een invloedrijke lezerskring. Analisten van centrale banken, hedgefundmanagers, traders en vermogensbeheerders, kleine beleggers en academici.
I mean, not to be impolite, but what makes you so special that they all want to read your blog?
I don't know if special is the word to use. I am very objective and I don't have inherent conflicts of interest because I don't have clients that I deal with as a principal or an agent. I can step on toes and be objective and offensively honest.
Reggie Middleton heeft als investeerder goed geboerd toen hij de huizencrisis zag aankomen door de ontwikkelingen in zijn eigen buurt te observeren.
We're in downtown Brooklyn on Flatbush Avenue, roughly about 45 seconds outside of Manhattan. These are empty lots where buildings were torn down to create condominiums and retail structures. As you can see, once the buildings were torn down, the market collapsed and the feasibility of putting whatever they intended to build there was no longer stands. What you see here is not what you see when you look at the balance sheet of many of the real estate companies. A lot of them are showing these properties at full value or just under what the value was when they were built. And if you take a look at it, they don't seem like they should be valued at what they were when they built because they're not occupied. You know, nobody knows how much any of this is worth. And this is just a small taste of what you've seen. You haven't went in any direction. You haven't been over the city.
But how do all these developers get the money to put up all these buildings?
Those people over there. It's JP Morgan Chase. You get it from the banks. You had free rolling credit, and then when the bubble popped, you still have the housing structures, but you don't have the demand, and you don't have the financing to back it up. So you have overvalued properties sitting on bank balance sheets, very similar to here.
Of Realtors contract index jumped 2.1% in February, but that still does not make up for a nearly 3% drop back in January. Well, my next guest is a skeptic of the NRA's data and says its forecasts are a, quote, joke. He doesn't mince his words. We're talking about Reggie Middleton. He correctly predicted the market was headed toward collapse back in the fall of 2007. He writes a very popular blog now called Boom Bust Blog, and he joins me now here in the studio live. Reggie, great to have you in
Thank
here.
You. Never follow anybody blindly. Always do your own research. It's just not smart. It's not a good idea. Particularly if you get something for free. Nobody can afford to give out anything of value for free for any particular amount of time, unless it's not free. They're compensated somehow. Usually, I tell my children the free things are the most expensive things in the world And then after you finish paying for it, you then find out exactly how expensive it was and how it wasn't free.
Tell me what the name of this shit.
Question is, did big institutional investors get material important information about Facebook before its IPO that smaller and individual investors didn't? Was it illegal? Did it hurt those individual small retail investors that didn't know that the IPO, that the pricing was all wrong? Well, you know what? I don't know what's going to happen, but this all could have been avoided if these retail investors watched Capital Account in the beginning of May. Reggie Middleton laid it out very plainly.
You take a good story stock, you give it to a very, very good salesperson, and what do you have? You create froth, okay? Now, froth and investment potential are not necessarily the same thing. No matter what metric you use, price to sales, price to earnings, enterprise value, cash flow, Facebook is grossly overvalued at what the underwriters are trying to push it at.
What gives Goldman Sachs the idea that they can simply flaunt the law like this?
They don't have the idea. They're working from precedents. Haven't they done it before? But I must say, any investors who are upset because they couldn't get into that IPO should count their blessings. You know, they were done a favor. All they had to do is just run the numbers on the IPO, and it was outrageously priced. Facebook would have to register effectively the entire world, the entire population of computer-using individuals, to justify that valuation today if you discount it back to the present.
When I run base, I dodge the pen. Lucky me, luckily they didn't get me. Now when I bring the nets, I'm the Black Branch Ricky from Brooklyn corners. Burning branches are sticky. Spread love, Biggie, Brooklyn, hippie. I pity the fool with jewels like Mr. T with no history in my barrel.